Christian, good morning. Thanks very much for joining us today. How are you doing?
Good morning. I'm doing great, thanks. How about you?
Yeah, not too bad, thank you. Not too bad. Now, obviously, Christian, I'm really pleased to have you on today. I think there's been a lot of interest around BlackRock's approach to the energy sector as a whole. I think there's a lot of poignant topics that I'd want to draw on, particularly given a lot of the conversations we've been having across our network in the recent past. I mean, just to sort of quote one in particular, I was chatting with Ben Colton at State Street not too long ago, and he was talking about this, the importance of having a pragmatic approach to decarbonisation and not necessarily approaching the energy transition through a binary lens of brown versus green. So definitely interested to get your take on the sector and your approach towards the sector, and maybe a good way to get us started for you to share a bit about your view of the role of natural gas in the energy mix.
Thanks, Ben. And just by way of background, so I sit in a team here at BlackRock that is on the infrastructure equity side, and we've been investing in the energy infrastructure space for a long time, more than 10 years. And a big part of what we've been doing has been natural gas linked infrastructure. So in terms of the role of natural gas in the energy mix, so we think that natural gas has a key role to play in the energy transition. We think that the transition to net zero will not happen overnight, and we'll need to pass through, let's call it, shades of brown to shades of green. So that's one. But we also believe that having access to reliable sources of natural gas, such as, for example, LNG, is also critical from an energy security of supply perspective, and of course, particularly in Europe. So just to go into a little bit more detail, in terms of the role of natural gas in the energy transition, there are really three things worth highlighting. So firstly, natural gas contributes directly to reducing CO2 emissions. It replaces coal as well as oil. And in Asia in particular, if you look at India still generates about 70% of its electricity from coal, and in China that's 60%. We have invested in a business called GasLog, which transports LNG from where it is produced, for example, in the US to where it is consumed, which is typically in Asia. So we do think there is a very good decarbonization story there for Asia. So that's one. Two, natural gas also, we believe, enables more renewables with 24/7 availability, for example, through gas peaking plants that fill the gaps when the sun isn't shining, the wind isn't blowing. And there we've made an investment into a company called Lexington, which owns peaking plants in the US, which do exactly that. And then thirdly, in terms of the role of natural gas in the energy transition, natural gas can also help to create cleaner fuels such as blue hydrogen, and we're doing exactly that at the moment. In one of our portfolio companies called Kellas Midstream, where we are developing a blue hydrogen facility in a business that is originally a natural gas transportation business. So natural gas plays an important role in the energy transition. And in terms of the other point that I mentioned around energy security, LNG and natural gas pipelines into Europe are now, as we're seeing, of critical importance. I've already mentioned GasLog as one of our investments in the LNG space that contributes to security of supply in Europe. Kellas Midstream, I also just mentioned. So Kellas Midstream is a gas pipeline network offshore the UK, which transports around 40% of the UK's gas from where it is produced offshore to where it is consumed. So critical infrastructure. And just to give you another example, we also have a stake in a pipeline called Medgas, which transports natural gas from Algeria into Spain. So that again contributes to Europe's security of supply. So it's a long answer to your question, but in summary, we think that natural gas is important both as part of the energy transition, but also from an energy security supply perspective.
No, that's brilliant. Thanks, Christian. I think you alluded to it there, and sort of it leads nicely into my next question, which is around, I suppose, the diversity of supply in the energy mix. And obviously, I think this week Steve Traube at Citi was talking about energy addition rather than energy transition, and the importance of all the different sources of energy in helping to meet demand, energy security, improve affordability, but also help to get us on that path to decarbonisation. And I guess the follow-up question to you would be, what is your view on the role that hydrocarbons can play in the energy transition? It's probably similar to my last question, but we can just elaborate on that a little bit.
Yeah, no, it is a very good point, actually. Our view is that hydrocarbon companies have a very important role to play in the energy transition. But why is that? So we think they ultimately have the skill sets, they have the expertise, the experience, the relationships, but also the balance sheets and the cash flows, as well as the strategic locations, the real estate positions that will be required to develop energy transition projects. For example, in the carbon capture and storage space, in the hydrogen space, and as a fund, our investment model is very much to build relationships with corporates in the energy space in our target sectors over time. And the relationships that we've built with oil and gas companies, for example, are now very, 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 very valuable, because we're seeing them taking a lead role in the energy transition. So I would say that the leaders of yesterday are, some of them also the leaders of tomorrow. So very important role to play. We definitely cannot discard hydrocarbon companies.
No, absolutely. Thanks, Christian. And maybe just coming back to your answer to my first question, you obviously described a couple of the infrastructure investments that you have in, say, Kellis Midstream and across Europe, and how that contributes to energy security. I mean, what investment opportunities do you see now moving forward to contribute to energy security in Europe in particular? And obviously now more important than ever with the situation that's evolved in Russia and Ukraine, and the drive to reduce European reliance on Russian imports.
Yeah, no, I think it's a very good question, something we're spending quite a bit of time on. There are some obvious ones, and there are some less obvious consequences and opportunities coming out of this situation. I think the more obvious one is essentially, supporting LNG import infrastructure in Europe, which is both land-based as well as FSRUs. And actually, we are, through our investment in Gasol, we are developing an FSRU import terminal in Greece, which will contribute to energy security of supply in that part of Europe, so Southeast Europe, which is, as you know, highly dependent on Russian natural gas. So that's one sort of more obvious set of opportunities. Then another thing I'd highlight is interconnection capacity in Europe. Gas interconnections are not as well developed as they could be. So to give you one example, there is a lot of regasification capacity in Spain, but Spain is not very well connected to the rest of Europe. So there could be an opportunity to connect Spain with France and bring gas from Spain into France. And there are a number of other examples of similar examples of essentially opportunities to enhance interconnection in Europe. So that's two. Biogas is another interesting one. So biogas as an alternative to gas, so biogas producers we'll see more investment. What is also interesting is that we think the current situation in Europe will most likely also lead to more interesting investment opportunities in the US liquefaction space, because ultimately we expect some European consumers to sign some longer term offtake contracts, which will then in turn unlock liquefaction investment opportunities in the US. So global picture there, and we do think that is interesting. And then that's on the gas side. Clearly there is also, and a lot of people have commented on this, that the current situation is likely to accelerate the energy transition. So we do think that renewables and batteries will see more investment, accelerated investment. And then there is already an energy efficiency drive, which will again be accelerated. You had a lot of talk from European politicians around turning down the thermostat across Europe by 1 or 2 degrees. So anything that can help with energy efficiency, such as smart meters and other technologies, will also be an interesting space to invest into. So quite a broad range of topics and sectors that are impacted.
No, absolutely. Thanks, Christian. And we've spoken a lot there about, say, gas infrastructure or gas opportunities, and obviously the energy efficiency and new energies type investment opportunities. But what's your view on investing in oil infrastructure? What importance does that have to play? Because we can't just say turn the taps off overnight. Oil has an important role in helping to meet energy demand, ensure energy security, affordability. What's your view on that?
No, Ben, that's a very relevant question. What I would say is that BlackRock does not pursue divestment from entire sectors as a policy. That's not what we do. So investing in oil is still possible, but what I would say is that our bar is very, very high. So if we're investing into an oil-linked infrastructure business, that business will need to have a very credible energy transition strategy. And the other key thing we'll be looking for is residual value exposure. So it will become harder and harder to sell oil-linked businesses in the future. The universe of buyers will diminish over time, and that's problematic for a fund such as ourselves that needs to exit investments. We can't hold investments into perpetuity. We do need to exit it at some point. So those are the two key considerations, and they're of course linked. So if you can give you an example, if you can buy into a business today that is largely and predominantly exposed to the hydrocarbon space, for example, in the oil product storage space, but there is a credible story and business plan around transitioning that business to cleaner fuels, cleaner products over time, making use of those strategic locations that the business has today. That could be very interesting, because then when it comes to exiting the business in 5 or 10 years' time, it will look very different, and there'll be a broad set of buyers that will be interested in the business. If you don't transition it, then it would be much harder to find buyers and find an exit at attractive valuation. So that's where we are on investing in oil.
Absolutely. Thanks, Christian. And just out of interest, will debt financing be available for fossil fuel projects moving forward?
Well, we are certainly seeing and observing a pullback from European banks, in particular from oil projects. I do think that the gas projects are typically still a lot more bankable than oil projects, in particular with what's going on in Europe at the moment around gas and LNG. Gas and LNG were included in the EU's famous taxonomy and are seen as a clean fuel. But overall, I suppose the trend is that terms are worsening and cost of capital is rising, and at some point less well-structured projects will struggle to raise debt financing.
No, 100%. That's interesting, Christian. And I think just to wrap it up, I want to go back to some of your comments earlier where you were talking about improving interconnectivity across Europe. You were speaking about the regasification capabilities in Spain, maybe interlinking Spain and France as an example. What makes an LNG or energy infrastructure project investable for BlackRock?
We're long-term investors, and we need to take a life of assets view, i.e., what do the cash flows of an investment look like over the life of the asset. And even if we only look to hold our investments for, let's say, 10 years, we do need to understand the profile of those cash flows over the life of the asset. Now, what I would say is that the energy transition has created significant uncertainties, for example, around contract renewal risk. Are you running the risk of having a stranded asset at the end of the initial contract period? Refinancing risk, which we just talked about. Is there going to be a market for reasonable or reasonably priced debt when it comes to refinancing? There's also regulatory risk, for example, around carbon taxes. Are the rules going to tighten? And then there's also exit risk, which I just talked about. Who's going to buy the asset or the business from you, and at what valuation and discount rate? So what that all boils down to means that long-term contracts, long-term financings, and strong counterparties are very, very important, which are really typical criteria for infrastructure investors.
Brilliant. No, that's brilliant. Thanks, Christian. And I think there's a lot of things I could delve into there, and I'm sure we could talk about many of these topics for hours to come. But we'll have to leave it for the next time we're together in person. But Christian, I appreciate the time. It's good to connect. Great to have you on, and thanks for taking the time to share your views today.
Thanks for having me, Ben.